which is also the home to the Expert Commercial Real Estate Experts podcast. Here we believe that high net worth individuals and their professional teams shouldn't struggle to find great options for deferring capital gains taxes. Don't let your failure to plan become your plan to fail, and the Deferred Sales Trust may be one of the best ways for you to exit your highly appreciated assets, to continue to defer the capital gains taxes so you can continue to grow your wealth. You are not in the wrong place. I am your host today. I'm Jessica Lanning. I'm filling in for Brett Swarts. Each episode, we are joined by some of the leading wealth advisors, business and real estate experts, and leadership specialists to share ideas, tell their deal stories, and share their inspiration so together we can make complex tax deferral strategies and investing simple and passive income plans achievable. Our next guest has taken his decades of experience in banking and finance to found a company called Elevate.money, which provides alternative investment access to millennials via its tech-driven platform. It offers fractionalized interest in commercial real estate portfolios to non-millionaires via a seamless and user-friendly digital interface. Please welcome Sach Jhangiani to the podcast. Welcome, Sach. Good to have you here.
Thank you so much. Thank you for having me.
So let's let our listeners get to know you a little bit better. Please tell us a little bit more about your story and what your current focus is these days.
Yeah, I'd love to. So, my background, as you mentioned, was working on Wall Street. I was in sales and trading, 17-year career, worked for some of the larger investment banks out there. And in that process, it was really, I didn't grow up, I grew up modestly. So it was my real foray into really seeing wealth and understanding money. And I learned a lot, obviously, working in finance. And what I found in that experience is that a lot of the jargon and a lot of the complex strategies that traders and salespeople and people, business people in finance understand, the average person doesn't. But they also have to keep up with inflation and grow their wealth, and everybody has that right. Some of the problems we see now with the with the economy is the wealth gap continues to increase. And, part of that is obviously things outside of you and your control, my control, but part of it is what we can't control, what we do with our money. And so what I do now with Elevate Money is try to educate, inspire, and also provide access to the tools and the knowledge to build wealth and build it, for the long term through Elevate Money by investing in real estate.
A little bit more about you so our listeners can get to know you. We believe here at the Capital Gains Tax Solutions podcast, as well as the Expert Commercial Real Estate folks one, that everybody comes to the planet with a special gift, a superpower, if you will, to further humanity, make life a better place here on the planet. What's yours? What's your superpower?
I love that question because I agree with you. I think we all have it, and sometimes it takes a little time to find it. I think that was part of my journey that brought me here. The reason I left my career on Wall Street and finance was because I felt like I was, getting away from my superpowers and losing them. And part of that superpower, I think, was, being able to communicate and articulate and inspire really people around me. And to do that, I have to be motivated and excited about what I'm doing so I could share it properly. And when I was in a career, early on, and I was learning, it was very exciting because I was sharing a lot of that. Over time, I felt a little more pigeonholed and put in a box, and I was losing that fire. And so by moving into entrepreneurship and taking on other challenges, and now trying to share something that I've learned and that I've been successful at with not just my peers, but really the masses, that's really exciting. And that's helped me a lot with Elevate Money. And the CMO, I'm responsible for the messaging and the marketing. So that's where a lot of that comes from.
Excellent. So we're going to talk today about democratizing commercial real estate investing. And I was sitting thinking about this topic, and I was like, really, do you have to democratize, real estate investing? But the truth is that you kind of do. There's some pretty high barriers to entry to getting into real estate. Why don't you talk about those a little bit?
Yeah, absolutely. I mean, the first and foremost one is capital. So, REITs or crowdfunding structures that have been around for a long time, since the 60s, and they were, created to be able to help people invest in assets, larger commercial real estate and real estate assets in general, without having to go out and buy an entire building or, entire property. So, that's been around. But what's happening now is that in this digital era and with wealth getting spread, down generations to the millennials and Gen Xers, they're all digital natives, and they actually invest in even smaller increments and spread their investments, through a whole array of assets, not just stocks and bonds, like, we grew up thinking about. And so we have to be able to make investing bite size so that they can test it, they can play with it, and they can build their portfolio, and then, educate them that, real estate is sound. You have a hard asset, it does pay income and all those benefits. And through volatility, I think they start to learn that and now have the ability to, decide how much they want to allocate to it. But to meet them, you got to be where they're at, and they're in the bite-sized digital, platforms. And so that's why I think democratizing it further and doing what Elevate does is really important, not just for today, but also for the future and for this upcoming generation.
Yeah, and look, most millennials these days are not going to be accredited investors, right? They're not going to have access to things like limited partnerships and other investment opportunities because they're not going to meet those thresholds. Can you talk a little bit about that and how you're also trying to accommodate for that?
Yeah, absolutely. So, we file under Reg A, which is a filing created through the Jobs Act that allows us to actually take on investments from non-accredited investors. So the minimum investment for our commercial real estate REIT is $100, which, that was not possible several years ago. You actually, at minimum was 10,000 or 20,000 just to get involved. And then you needed to know someone who could get you into limited partnership or have a wealth planner. And, there was layers of, hoops you had to get through and doors you had to open to even get access to just investing your money. That's not the case anymore. And so we really have leveled the playing field. It takes 4 minutes to become to invest in a portfolio of commercial real estate on Elevate Money.
And talk to me a little bit about what's attracting your client base to you. Are they most interested in just getting something that's away from the stock market? Are they really lit up about real estate? Is this just something fun to play with? Like, what's your sense about your client base?
Yeah, I mean, I think it's a combination of all of it, but I think most of it, comes down to the fact that they're looking for passive income. And I think more so in the last year with rates rising and inflation and volatility in other markets. So they want something that's not moving. So, we've paid a monthly dividend with a 6.5% annualized yield for 18 consecutive months. So they haven't seen any volatility in our product. Our leases on our properties are, on average 10 to 12 year maturities. So they're not seeing a whole lot of, price volatility, but what they are seeing is that every month their account is growing, and, 90% of our investors reinvest their dividends, so they're compounding that growth. So they are learning about that. They're seeing the benefits of that. And I think what really tells us that we're on the right track is, I think what's a really staggering number for us, being around only a couple of years, is 40% of our sales every month of REIT shares goes to existing users. So that means that they're starting small, they're seeing it work, and then they're adding more money, every month to increase their allocation to real estate. And that's what we want, right? We want them to see the benefits and then, grow that asset class.
And I know that there are some restrictions. I think it can only be 10% of income or something like that they can invest. Can you talk a little bit about what that minimum is and why that exists?
Yeah, it's only 10%. And, obviously that's what FINRA, the regulatory bodies deem as being, safe and trying to protect the investor. And, I will say that doing a Reg A offering is significantly more challenging than going after, just accredited investors. There's a lot more restriction from language, from the way you can market, for how much you can take in, for how much the fund itself can take in. It's capped at 75 million a year. And so we'd have to have a second REIT and a third REIT and a fourth REIT as we grow. So there's more expenses, more time. But we believe it's that important to be able to, present this opportunity to the average investor. And so we take that challenge on.
And talk to me a little bit about what kind of properties you're targeting to bring into your REITs.
Absolutely. So our focus on the commercial REIT, so we have a new residential REIT that we're launching as well. The commercial REIT is focused on single tenant net lease. So that means a single asset with one tenant. Think gas station, car wash, dollar store, Taco Bell, things of that nature. So the way we look at it is, these are everyday businesses that provide all of us Americans with services that we use on the regular basis. And so they've been around, most of our tenants have been around for 20, 30, 40, 50 years as operators. Some of them are BBB credits. They need that real estate to run their business. So what's really nice about that is that we believe it's really low on the risk spectrum for real estate, because the business needs to pay the rent so that they can actually earn the revenue. So it's one of the last things they probably stop doing if things are going bad. And then on top of that, these leases are long-term leases because they don't want to deal with that every year like, homeowner does. They're not planning on moving. So, the leases are anywhere from 5 to 20 years, and we try to average about a 10-year maturity, on the portfolio. A lot of those leases also have rent increases. So, a lot of things are accounted for. So it's kind of, like I said, we've paid a consecutive dividend because our tenants will keep paying us rent, and things continue to just move on because they got a business to run.
And do your investors get to see what properties they own?
They do. Yeah. We share, everything. We're very transparent. Everything is shared on the website, even if you're not an investor. The properties we own, why we purchased them. We rate location, tenant quality, financials, and really try to give them a deep dive on, what made us choose this asset for the portfolio, and not just about the asset, but overall portfolio allocation, how it fits into the portfolio strategy as a whole. So, the leverage we take on, on the mortgage. So we cap the LTV at 60%. So it's modest leverage. We're always going to have, a decent amount of equity in the asset so we can, fight for it and keep it. We're not going to, you have some volatility and too much leverage. I mean, that's how you easily blow up. So, our job, number one, is we want to give our investors consistent, predictable monthly cash flow. So with that, we're not going to have these outsized returns in this fund. They're not going to be 15, 20%. Our target is 8 to 10%. But with that, we have so many layers to try to protect them by staggering maturities, staggering, lease expirations, all of these things we think about from a portfolio allocation to really minimize the risk everywhere we have control to do so.
And I imagine that people who are investing are not doing it through their 401ks, right? That they probably have through work or even their IRAs. My guess is that it's coming out of what I would call an individual account or a taxable account. Mm-hmm. What are you teaching them about taxes? What are you giving in terms of a recommendation of how much of their portfolio should be in your REIT? What do those guidelines and guardrails look like?
Yeah, so we're not allowed to give any recommendations. So that's number one. That will be a financial planner's duty. We cannot give any recommendations. All we can really express is, we do share that, look, the average recommendation is 10% of your portfolio in real estate. Wealthy individuals, high net worth, put in anywhere from 20 to 40%. So real estate is an important asset. Here's why it's beneficial, because it doesn't have the price volatility that equities or stock or crypto and things like that nature have. It pays an income, so you're actually the price can go down, which means your return is gone, but we can't take your income back. We can't ask for the dividend back, so that's yours. So you protect yourself and build your wealth through that. It's monthly dividends, so you can compound that. So these are the things we can share with them, but we cannot guide them into what they should do as an investment. We can only offer them the opportunity.
Well, and the education too. I think that's fair. I mean, that sounds to me like what you're doing. What happens to the properties when you're done with them? So you've got a 10-year or a 12-year window on them, and now you're ready to move on to something else. Are you doing 1031 exchanges?
Well, it's possible that we would, if we haven't had the challenge yet, but if a property has appreciated a lot, and let's say we buy a gas station, now all of a sudden that real estate is significantly more expensive because somebody wants to build a condo on it, and the lease is expiring, and they give us a great offer, yeah, we would consider taking that offer. That would be our fiduciary responsibility for our investors. A lot of the times we want to have that person re-sign another lease, which many times they do, but the markets will determine what direction we go. If we were to sell it and we were to take a capital gains, we obviously don't want to pay the taxes and have the investors lose out on that. So 1031 exchange would likely be the way we would go.
What's your biggest frustration when it comes to a 1031 exchange or capital gains tax deferral options?
Exactly that, having to execute it. So I think that's something that we don't want to mess that up, because messing that up is extremely costly. So when you're doing something like that, you want to work with someone has experience and understands those laws. From my perspective, the concept of a 1031 exchange is very simple. From my understanding, the details and the execution of that is way more complicated. So we understand it. We'd like to make sure that we execute it.
Excellent. Yeah, I mean, that's what we're doing here, at the Capital Gains Tax Solutions podcast. And, even with the Expert Commercial Real Estate's, Secrets podcast is really helping educate people about, what some of the other options are when you have highly appreciated assets and how do you sell them and continue to defer those capital gains taxes. I don't know if it's exactly on point here, but it's just kind of what came to mind. And I know a lot of our listeners are very attuned to that. If you are listening to this podcast and you want to learn more about the Deferred Sales Trust, how to sell a highly appreciated asset and continue to defer those capital gains taxes, I'd be happy to talk to you. Again, I'm Jessica Lanning at lanningfinancial.com, and you can also go to the capitalgainstaxsolutions.com website. Okay, are you ready for the lightning round?
Can I just say that I wish I had met you when I was selling my house 5 years ago? That would have helped.
It might have helped, but in my office, we never do shoulda, woulda, couldas. So you got to let it go. Like we all should have bought Apple at $2 too.
Exactly.
So
well, hopefully you'll help a lot of other people. So that
will help a lot of other people. All right. What's your favorite book that you read or gifted in the last year?
Oh, it was called Manifest Now, which is interesting. It's not the typical business book, but it was more about a mindset of, when you have a startup and you have a long-term vision of something, but you've got to deal with the daily grind and not every day feels like it's, rosy and it's going to always work out. I think that book helped me sort of create a framework to, continue to keep the vision alive, even on the bad days. And I'm really glad it did because, it's gotten us this far and a lot of good things are happening for us.
I like that. I will check that one out. I think I've seen it, but I've never actually read that one. Okay. What's your favorite leadership quote or theme you strive to live by?
Well, okay. So I would say one of the things that really I stick with, I don't know where I heard it, is if you're not growing, you're slowing. So there's no such thing as sort of, status quo. If you're not building on something, you are getting weaker. If you're not getting stronger, you are getting weaker. There's no just plateauing. So to me, that means that it never stops. I wake up every day. How do I get better as a person? How do we elevate money better as a company? How do we communicate better as a team? Because if we're not addressing those things every day with a vision and a focus of we got to get better than we were yesterday, by nature, we're going to get worse.
Okay, imagine you could go back in time. What would you tell your 25-year-old self?
Have a lot more fun.
I love that. Okay, what are you most curious about right now?
Probably what a lot of people are is AI. I think it's a really fascinating thing. And I think what is very interesting about AI is that because it builds on itself, we've never really seen any technology escalate and grow at the rapid pace that AI will. So what AI will be a year from now will be light years different than what it is today. What it'll be 5 years from now, it's incomprehensible. So I think that I'm not fearful of the technology because I think, these are all tools and how we utilize these tools can make our lives better or worse, but really fascinated by the fact that something can improve that quickly and can, how as humans can we process that and actually keep up and keep learning it at the rapid pace that it's going to change.
So you've had a lot of great success in your career. What's the one habit that you try to practice daily or weekly, which helps you stay centered in your values and keeps you moving forward to new goals?
Journaling, without question. I think it helps me get a lot of the thoughts, good or bad, out so I can reset and be present. I think that's the number one challenge. It wasn't always the case when I was younger. I felt like there was I would hold on to things and not move forward fast enough, or I would be too concerned about the what ifs of the future, and you're missing the opportunity of that moment. And as I've gotten older, I've realized that that's where the focus should be. So how do you keep that focus? Journaling has helped me sort of do that.
You keep your journals or do you shred them?
They are digital. So
Okay.
somebody else is going to have them or read them one day. I don't know.
Careful what you say.
Exactly.
Listen, thank you so much for being on the show. And I want to encourage you to keep using your gifts of entrepreneurship and just staying in what lights you up. I really loved hearing you talk about, it was important for me to stay in what I'm interested in, because that's how I'm passionate, and get other people interested in it as well. And to be a blessing and a help to others. So for those who want to get in touch with you, what's the best place for people to find you?
Very simple. It's elevate.money. So it's not .com. The website is
very important. Yep.
Very important. Just .money. The company's Elevate Money. The website's elevate.money. And all the information is there. Our contact information is there. That's the easiest and fastest way to connect.
Excellent. That wraps up the show. I want to thank you, the listener, for listening to another episode of the Capital Gains Tax Solution Podcast and the Expert Commercial Real Estate Secrets Podcast. We believe that high net worth individuals and their professional teams shouldn't struggle to find great options for deferring capital gains taxes. Don't let your failure to plan become your plan to fail, when the Deferred Sales Trust might be your very best option for exiting your highly appreciated assets, continuing to defer those capital gains taxes, and to grow your wealth. Please remember to rate, review, and subscribe, and we'll see you next time. Thanks.